Silver has actually been classified as a poor man's gold, so it is pretty correlated to gold returns as well. But obviously it's a different use. It's also used in solar panels and that sort of thing, so it's also largely driven by the economic cycle. If I had to put a broad-based spectrum, you've got the base metals that are purely linked to the economic cycle, along with energy and those sort of things, and then you kind of have silver in the middle and gold as an asset on its own, which is different fundamental drivers. We produce 70% of global platinum in South Africa, so it's highly sensitive to what's going on in the South African market. Obviously the strike action has been massively supportive for platinum returns. I believe that should the event start to subside and guys get back to work in South Africa, I think that the platinum price could be under pressure. It has moved significantly in a very short space of time. And I guess on the demand side, if you look at platinum, the largest component is it's being used in catalytic converters, which are in automobiles, right? So it's very susceptible to the global economic situation that we're in at the moment, where vehicle demand is actually pretty low, and that's obviously going to put downward pressure on the platinum price as well. Copper's largely driven by Chinese demand. Obviously, massive urbanization going on in China. We've seen that over the last sort of 10 years. In recent times, Chinese growth is starting to peak, and there's a lot of guys that are a little bit concerned about China going forward. So that should keep copper prices within check. I think the biggest theme in the copper market is China. You have to have a view on China. Do you think that growth is actually going to increase from these levels? If you do, then I would suggest that you do buy copper. However, if you believe that Chinese growth is falling off a cliff, it's not the place that you want to invest in.